All right, Nvidia reporting after hours, had a really good report. Shares were down a little bit today and then a little bit in after hours just after the report came out, and continuing on now to about 6:37 when I'm recording this. It was actually a spectacular quarter, and it didn't come off because it didn't meet expectations or anything like that. It's just been trading up so strong, and I'll get into that a little bit more in the video. And I think it's just a normal sell on the quarter kind of thing regardless. But it was a great quarter. Let's make no mistake about it. Let's get into that right away. Revenue was up 38.7% at 3.08%. Sorry, 3.08 billion, and that's up 38%, as I said. Earnings per share was up 104.5%, so it was $1.80, and the previous year was only 88 cents. Both the revenue and earnings per share beat analysts' expectations. So we had analysts were expecting 2.97 billion, so that's a beat of 3.7, and they're expecting $1.65 in earnings, and that's a beat of 8.3%. So you might think the stock should be up if you just. And normally it would be, on an earnings report like that, that's a pretty good beat and, good sequentially as well. You would expect it to go up. But the stock has just run so much that I think some people just took a pause, and that's fine. I get it. I was not long. I liked the company. Thought they were operating fantastic. Thought they have great technology, leader, everything you would want, but that price just kept running and running, and I'm like, I got to get a pullback, and I just could never get one. With this earnings report, I'm not sure that we're going to get too big a one. Maybe we'll get a little one, but let's take a look at the stock chart first thing, and it is pretty fascinating actually. Okay, so here's the stock chart, and this is a year-to-date one, so it was trading at 239 at the beginning of the year, peaked out in February 19th, dropped down for the COVID reasons, although their bottom looks like March 16th, and interestingly enough, the actual market bottomed out on March 23rd, so it was like a full week later, or a full week early, I should say, that they bottomed out. I don't know, it's kind of weird. And then just powered right through, and it was really remarkable. That full gain is something like 50% gain. It was $196. It's now $351. So that's a huge gain. I'll be honest, it surprised me. I thought Nvidia was good. I thought it was an opportunity. I did everything, but I can tell you one thing I've learned in this business: talk is cheap. If you didn't own it, and you said I would have owned it and all that stuff, then it just doesn't count. And so for me, I missed it. I gotta come clean there. I did not have strong enough conviction to buy it, although I do like it. Okay, I'm actually, even though the price is much higher now, given the data in the quarter, I think I'm still I gotta change my tone a little bit and be more bullish. Okay. More to it, the story. Let's look at our model. Give me 1 second to bring that up. And I'm going to try something a little different today. I grayed out the actual valuation area because I want us to think about the company first. And that would be, looking at the chart right beside it, the bar chart. The one on the top is the history of return on capital right up until here, with the light blue being the trailing 4 quarters, and not today's quarter because it just came out. We don't have that data. The bottom is the capital growth. So, we saw some good times, a little bit cyclical, bottomed out in 2009, normal, built itself back up to 24% return in 2019. That's when the stock was going crazy. There were some supply issues and some things going on in China that brought it down. There was some cyclicality in the industry overall as we moved from 4G to 5G, and that's what this dip from 24 down to 15 is. But at the same time, they kept their capital growth up, and they were making some acquisitions, Mellanox being one of them. And so they just, that didn't phase them, which I think is good. Now I have this using the trailing 4 quarters. Sometimes we like to annualize the last quarter and not use trailing, so we just take the last quarter and say whatever that cash flow is, let's multiply that by 4 for a full year. And I'm going to do that by just using this little drop down that we have here. And all of a sudden, it's actually 18% return on capital. That's pretty good. And that was as of the January, that's their year end actually, January quarter. So now we got the Q1, should hit our database any day. I think they're going back. This is why I covered up. Yeah, let's just kind of back up here a little bit. So I covered up the valuation because I just want us to do a forecast without being biased by the valuation, what the intrinsic value is and what the actual price is. Okay, so if you just look at their history, they've been, always growing their capital. They've been aggressive recently, and I think that continues. So I'm going to put 20% growth in capital. And then I believe the returns are going back to 24 based on this last quarter. So I want to put in 24% return on capital. Okay. Then 5 years, yeah, I probably would, to be conservative, I'm going to fade it a little bit. I think I'm going to use like a 21. I think 21's fair. Maybe a bit aggressive, not sure. But I also want to think about a little bit longer term, and we have a pretty steep fade here, so I'm going to make a little adjustment. I'm going to say 6% fade rate, and then in the long run, they're actually going to earn more like a 12% return. Now, it's a bit aggressive, that scenario, for sure, but the company's doing really well. It's not as cyclical as it used to be. It's starting to really dominate in its area. So it might be a bit aggressive, but let's see. Now let's do the reveal. Let's get rid of this box here that's covering the valuation and see what we actually came up with here. I did not do this in advance. That is unbelievable. We came up with 369. It's trading at, well, when we record or when we download the data, 347 at the time. It's about 350 right now, I think. So yeah, whatever. It's a few dollars off that, but whatever. So that's a fair value. Now that's interesting to me. That says this is kind of the betting line now. We developed a scenario that we thought was real. It looks like that would be the betting line. Do you think they're going to do better than this, or do you think they're going to do worse? That's really what we just set up, and I'm not sure. I mean, I feel pretty good that that's what they're going to do. So here's how I'm going to play this. I do want to own this because it's just so good. I know valuation's difficult, so I'm not married to my valuations, but I like to know what a reasonable projection would warrant in terms of fair value. I want to try and get it lower still. I still want to get this lower. It's had such a good run. Earnings came out, and you saw a little bit of the weakness in the trading side, not weakness in the results. And I'm not going to be too greedy here. I just want to get it down a little bit, 5, 6, 7% lower, and I'd be in. But right now, I'm just going to wait. I'm going to see how it opens up tomorrow. There's a good chance, by even tomorrow, you could buy it. It could be down 3, 4, 5. If it was somewhere in there, I'd probably nibble. Probably wouldn't take a full position right away. But I know if I can just get it just a little bit lower, I'd feel a lot better about it. And we're doing this for the long term, but I still want to get that short term little pop if you can get just a little bit better price. All right, that's Nvidia. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.